Welcome back, everyone. We're here today with Bruce McLeod, Director, President, and CEO of Sabina Gold and Silver. Bruce, how are you doing today?
I'm doing great, thank you.
For viewers new to the Sabina story, could you provide a brief overview on the company, asset, and team?
The asset is the Back River Gold District. We acquired that in 2009, have grown the resource from a little over 2 million ounces when it was acquired to our last resource update at 7.2 million ounces and measured, indicated, and inferred at a grade of over 6 grams. Not only have we significantly expanded the size of the resource, but have also delivered 2 feasibilities. One on a large mining scale at 6,000 tons a day, and the second, which is really what we believe is the go-forward case, is a 3,000 ton per day mine plan that would envision mining a little over 240,000 ounces a year for the first 8 years, and 200,000 ounces for the 12-year life of mine. The economics on that study were done at a very low compared to today's price, 1,150 US an ounce in late 15, and that showed a 24% after-tax rate of return. If we look at our tables of gold prices and plug in something close to today's, that is a significantly higher rate of return. We have demonstrated not only that the resource is open to growth, but also that some of the new discoveries we've made since our last resource estimate, that we found some even higher grade areas in both Llama Deep, Umwelt Vault, and Nunavut, and believe that the entire belt, which is 80 kilometers long, and we own 100% of the prospective geology within that, has the demonstrated probability of increasing the size and tenure of that mineralization. We've continued to de-risk it through engineering and a lot of the construction work. We've acquired our permits and social license and de-risked the project through developing our transportation corridor, a northern project, so it is logistics challenged. And what we have done is now built our port facility, built our winter ice roads. We've tested our entire logistical and supply chain from southern Canada by land and by sea directly to the project. That combined with a strong balance sheet, a little over 26.2 million in our treasury as of our last financials, and with a board and management team that has built and executed projects in the north and other difficult, I'd say more difficult areas in our careers. I think we added it up, and there's been over 87 advanced projects that we've either been, our team has been involved in either developing, operating, permitting, or constructing. The catalysts, it's certainly changed because of COVID-19. What we were just in the midst of doing when it obviously it looked like it was going to get worse, not better, is we were just about to start a spring drilling campaign on our property. And on March the 15th, we made a decision to defer that. Went to a work from home protocol. Demobilized everybody from our camp, decelerated some of the project development activities, particularly those that we'd had to be on site for, and implemented a number of measures of telecommuting and working from home. Implemented a reporting tracking system, employee health through self-quarantine after returning from camper travel and in general, and have developed a plan that when things normalize, and whether it be late summer, early fall, that we can still complete that drill program before year end. And as in the interim, if we look at the 7.2 million ounces in all categories, plus the new discoveries that we've made, I don't think it's you have to really stretch your arms to see that we're getting close to probably a 9 or 10 million ounce potential within this belt. And really the opportunities that we're working on right now is we are looking at an upside case with bringing some of these additional resources into the mine plan, looking at ways that we can accelerate some of the higher grade earlier by going underground early in the mine life rather than later. And that would bring some of that 12, 13, 14 gram material that we've been delineating at depth into the mine plan earlier. We think that that has the opportunity to increase our gold production on an annual basis closer to what that 6,000 ton a day feasibility was, but at a much lower capital based on higher grade rather than just the more of the same tons. And also working on project execution plans, some of the other things that we can certainly do as a team when we're not on site. So I think with that being said, considering that we're not currently working on the property, we're still developing catalysts that we can add more value. And at the end of the day, we're a well-financed gold bank that, with the new interest that we've seen, certainly in non-currency based investments, I think we provide one of the best opportunities of our peers.
One of the things we've recently discussed is that gold is making record highs in Canadian dollars. What's your overall take on the gold environment right now and the sentiment you've noticed from mining investors and generalists?
I think that I've certainly seen a lot of investors that haven't traditionally been investing in our space and had a number of conversations. We had a conference call this morning with a Canadian generalist investor that has never invested in the gold space. And his investment thesis is, with the amount of liquidity that's being put into the system, the amount of dollars that it's taking to solve this, that he has moved to gold. He's moved to businesses that he think that can come back very quickly post-corona. A lot of the biotech field, but really it's that protection against what governments have had to do in order to maintain liquidity in the system that I think makes gold one of the best stores of value, and it is working as it's supposed to for that store of value in times that are certainly not normal.
I think one other important thing to note is that your active asset is Back River, but Sabina also has exposure to silver through your passive asset, the Hackett River royalty. Could you talk a little bit about that?
Hackett was an asset that we owned. We sold it to Xstrata, which was developing it for feed for the Brunswick smelter. Xstrata was taken over by Glencore, and so Glencore now owns that asset. And what we have is a royalty of 22.5% of the first 190 million ounces of silver produced, which is approximately the resource today, and 12.5% thereafter. So you can envision, based on the resources, at almost 40 million attributable silver ounces at no cost to Sabina, if and when that project is put into production. So certainly a nice optionality in the silver price for us, something that doesn't cost us anything to maintain. And with having a major as Glencore as the operator, certainly someone who has the capital and the ability to move that project forward if and when.
Bruce, before we wrap up, were there any other points you'd like to touch on or things that we missed?
I don't think necessarily about the project, but I think that we do have a plan that we can accelerate things quickly. I think one of the challenges has been the lack of equity in the capital markets, and I think that any duration with the economic stresses that we've seen in this today fragile economic system is certainly going to bode well for gold, and I think that will bode very well for Sabina and Sabina shareholders.
I think that's a good point to end on. If you would like any more information on the company, you can visit their website at sabinagoldsilver.com or check them out on the Toronto Stock Exchange under the symbol SBB. Thanks for watching, and Bruce, thanks for taking the time today.
Thank you very much. Take care.